Good afternoon, everyone. Good to see you all this afternoon. Welcome to the PivotBoss Trading Room. This is the monthly market outlook for June, and this is something we do every single month, and I'm glad that you all are joining me here today. First off, I want to say thank you very much for posting your recommendations in the chat there. Very, very helpful. And so for those of you that can attend, for those of you that will be watching this later and couldn't attend live, you're going to see your requests there covered later on as well. So got a nice full agenda here. We have several long candidates to look at, some shorts as well. We're going to talk higher time frame markets as well as we head into the later half of the year here. We have June heading into summer, and then we have the August and October trades that are coming around the corner here to head us into the end of the year. We'll see how those play out as well. So we'll get started here with the ES. Right now, the ES, if you look at this chart right here, there's one large key range that we've been working with. This range right here comes from last year, where we had this. No, rather, it was 2018. It was the Q4 2018 sell-off. An aggressive, very aggressive sell-off that made the earlier 2018 move look very teeny. This was a 6 or 7 day drop. It was huge back then. This drop was even more significant, and now you see this one over here just tremendously volatile. You can see we have some kind of expanding range that has developed like this, and those kind of ranges again are very, very volatile ranges. This is what you tend to see out of these. And we got the bounce where we thought we should get the bounce, which was taking out the December low. We went into 22 to 2300. That's exactly what we talked about, and it's been up ever since, and it's hit 30.50 here. 53.5 is the closing price today. So right now, tremendous bounce off these lows. And I'll admit, I went, going back to the tape here, I mentioned that we were not likely to see a V-bottom recovery out of this deal. And that's exactly what we got here, at least short term. We got a V-bottom move. And that, obviously, sometimes it's the last thing you expect that actually happens in the market. And that was tremendous, the turnaround we've seen from those lows. Having said that, this market has rallied tremendously, and the pullbacks have been fantastic. One thing we've been talking about here is every pullback remains a buying opportunity until proven otherwise. And when we're discussing these markets right now, one thing I want you to look at is the pivot range here. You got this pink range right there, this range, right, that range, and now this month we have this range right here. This is what I call a higher value relationship. For those of you who have my book, Secrets of a Pivot Boss, I discuss value relationships in there. This is what we call the higher value relationship with the pivot range. And previously, it was in a lower value state, right, where it was dropping. Value was dropping. Right here was the change of bias. That day, push price back through the top of that previous month's mid. And then once it shot through there, the pivot range has become support for some nice bounces. So this has been tremendous. The strength we've seen. What I usually say here is that until proven otherwise, we are still in this trend. Until proven otherwise, we are trending higher. We have pivot range support down below. You can see the initial test right here this morning, right at the top of the pivot range, was defended. But it was a very quiet day today. Painfully quiet almost. It was one of those days that looks like it's sucking people in, and then maybe something might happen. We'll see if there's some volatility that comes out of this range here soon. But one thing we're looking at is this narrow 4-day range that has developed here. This indicator down here is the PivotBoss Advanced ADR indicator. This is one that I developed to help us quantify the range of any user-defined range, right? So right now I did a 4-day range, and that's looking at 4 days. If I wanted to do a 20-day range, I can do that. If I wanted to do a 5 or a 1 or a 3 to basically quantify whatever range I wanted to, it's very simple. And from there, we can now look at the data down below. And while the range is 66% of ADR, it's still clearly compressed. It's just not below that threshold of 65%. 65% would give you this color right here. and that would mean that this market is super tightly coiled and ready for expansion soon. And we're basically there. If we do see expansion over the next 4 days, we would be expecting about 177 points of movement. So if we were to see a breakout over the next 4 days, we may rally to about that point right there, and that would complete kind of that signal. Again, when markets see volatility increase like this, it tends to come back and decrease, and then it increases again and decrease and increase and decrease. So it's a wave that continues to happen. In this case, we have decreasing volatility, and soon we may see an increase with a breakout here. So right now, we have the long term and the short term we're looking at. The short term, everything is still going up. If this were to pull back as deep as the midpoint from last month's range, that would still be a great buying opportunity for a continuation higher. A failure here rotates this thing back toward 2750, recent support. But right now, any counter trend rotation here, 1 to 3 day pullback is still a great buying opportunity, and until proven otherwise. We are right around a major area of resistance in this chart, which is the top end of this range back here, so I'll draw that in right there. This is the zone where we're at right now, and last time it broke through this area, it screamed higher to 3,400. Right here, it looks like it's trying to hold above that zone, but if it fails, say it fails to hold 3,000, that could open up a rotation back down again, as we mentioned, back to the bottom of this range. So we just kind of took it from the higher to the lower here. So right now with the ES, still bullish, still looking to defend pullbacks, but I am respecting this 4-day range right here, because either way it goes, it could break down first and then find a sharp low, and then from that low we can project 177 points higher, and that would give us a very good definable target to strive for. So again, even if we did pull back a little bit more here tomorrow, say we hit 2980, we can then forecast higher, about 170, 150 points, and that would give us a good target to look for. So some thoughts right there on the ES. I think from a higher time frame perspective, if we're looking at that weekly chart, we've got a tremendous expanding range here. Again, super volatile range. Look at it. Whenever you have a range like this, it can still break to the downside at some point. It's starting to look a little like a diamond pattern. And for those of you that have the old school technical analysis books, a diamond pattern would look something like this. And then ultimately it would resolve itself down. But there are times where it can break to the upside. So this thing could continue to trade kind of in this range for a while. And the baseline here is basically 2,800. That's your baseline. That's the key level there. And you can see it right here. If I bring this back, that's it, 2,800. And so when we get too far away from 2,800, we snap back to it. Up here, we got too far away, you snap back to it. Right now, whenever we come up here and we find that high at some point, we're likely to snap back to 2,800. So that's going to be an important level to continue to watch. But this large diamond-shaped pattern is something to continue to keep an eye on as it develops. The expanding wedge, or expanding cone, however you want to define that, is also very significant. The uptrend is clearly intact, but this pattern is going to be something to really watch as we move forward. It's tremendous in size, unlike anything we've seen in the ES ever. So this is something that I'll continue to focus on. So that's the long intro there for the ES. Short term, we're watching that 4-day range. Medium term, any pullback is still a buying opportunity unless it fails to hold 2,900. And then we'll see where this thing goes as this thing continues to climb higher. Very strong. Now my favorite has been NQ for trading lately. The NQ has been tremendous in its movement, its price action. It has been tremendous the way it has moved lately. And it has followed our rules so tremendously well. And the rules are obviously defined in my book, Secrets of a Pivot Boss. Again, higher value relationships, for example, right? When it pulls back, you buy and you go. Pulls back, buy and go. And then when it fails to hold that, you're going to start your downtrending approach until proven otherwise. Right here it proves otherwise. And you can see these pullbacks have been perfectly measured 3-day pullbacks. And again, using the advanced ADR indicator down below, right there, we can drop this to 3. And now what this is going to do is quantify the 3-day ranges that we're seeing here. And one thing you'll notice is right here, oh, let me grab that tool. Right there, that 3-day range. You also have this 3-day range, this 3-day range, and this is a 2-day range. And those were very, very important in helping us define the pullbacks here recently, again, with this indicator. And that's how recently, you know, when we have a top that comes into play like this, for example, and we know that the 3-day range was forecasting something like 500 points, we knew that we likely had a move that was coming to about 500 points lower. And when that happened, we were able to then buy in and get going. Same thing over here. We were looking for about a 400 to 500 point correction on that failed high, and we got it. And all of those measurements came from this one. And now we did it again over here, where we were looking for a correction and a quick turnaround. The other thing happened here is that we had this nice rejection day, a nice signal there, perfect midpoint entry, and this market's been holding for 3 days up here. So it either has to get going or it's going to fail at some point because we are coming up to that high. And so a trending market tends to continue trending until it finds rejection. And in this case, we've been trending up, 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 and rejection is going to come, or would come, right at this line. And that's the point where we got to start watching to see what happens, because price could easily come up here, easily take out the all-time highs. And then what happens if it does this? If it sits up there the rest of the summer, or sits up there for a month or two at these highs, it will begin to look very distributive. And in a distribution here, you would then likely see a markdown phase that follows by some magnitude, right? Perhaps not all the way to the lows, obviously, but you have a midline here. Somewhere around 8,400 is a very good near-term market structure level. So if this market were to reject these highs, you got to continue to watch these highs. If they rejects up here at 9,800, perhaps we have something that could bring us back toward 8,400 on a market structure level. That's also right around where the 200-day is, 200-day moving average. And again, it's too early to call that right now, but I want to give you an advance warning so that you can watch for that and watch for signs of failure down the road. This one has been fantastic. Again, tech has been leading in many ways. Lots of stocks in tech have just tremendously rallied off the March lows, some of which we'll cover here in a moment. But just fantastic trading action and price action out of the NQ. Lately, it's been my favorite. So when we're looking at this from a weekly perspective right now, again, just a tremendously large range from this impulse sell-off. And then price bounced all the way back to the midpoint of that sell-off. And now we have ourselves a giant key range that we can use moving forward. That key range is about 3,000 points. So if we were to break to the upside at 9,800, right, that's gonna move the market toward 13,000 at some point down the road. So that means that if we were to see something, any pullback back to say these lows, you may be able to double in, right? If this thing comes down here, again, this would be way off. This is just a key range, key level that we would like to buy at. This would be the greatest take out and go again. And that's basically what happened over here. You know, if we can take out these pivot lows, it could reject. So now we're looking for the same thing up here. So we'll see how that plays out. But again, this market has been very strong, and until proven otherwise, got to continue to defend these pullbacks while watching with one eye the potential signs of rejection here, because it could be significant if that were to occur. Now, another one of my favorites here lately has been crude oil. This one has screamed higher here. This past month is probably the most bullish month on record for crude, and there's been a lot of them. But you can see this turnaround off of $10 here. Nice strong rejection off $10 and rallied up to 35s. For those of you that watch my morning outlooks or morning pre-market videos, one thing we noted here a couple of weeks back was this narrow 7-day range, So now if we go down here to this indicator here and make this 7 days, 1, 2, 3, 4, 5, 6, 7. There it is. Now we quantify this range. And you'll see right here, nice, oh, where's my rectangle? Right there, narrow range. And then when you look down here, this is the quantification of that range. So that is compression. And so whenever you get the breakout like we do on that day, we were looking for 9.5 points of movement over the next 7 days. And over here, that red dot is what gave us that that measurement. So initially when we saw the red dot right there, you can see over here it says 938 right now. It's come down a little bit, but that is what we were expecting, was about 9.5 points of movement. And we got about 9.38 points of movement. That's what we got. So once we got that breakout, we were eyeballing 35 as the target. So if we're going to break 26, 9 points up is 35. 35 to 36 for 9.5 points. And we got there. We're sitting right at 35.50 right now. So that is a fantastic way to use that indicator to help quantify targets and also quantify compression ahead of expansion. And so over here, you're seeing it again, aren't you? So here's the breakout that's starting to happen right now. This is your compressed range right here. This is your narrow 7-day range right there. We got the breakout to the upside. Today was a hold off the lows, which is the breakout point. Tomorrow, it would not surprise me to see a huge up day through 36. A stop run day of some sort would take you at least to 38. Right now, the average daily range for crude oil has been $2.59 over the last 10 sessions. $2.59. Over the last 5 sessions, it's been $2.93 per day. So just say we go up $2.50. Again, if we break through 36, we have a good shot to hit those 38 halves tomorrow if we break out through that zone. So we've already broken out through the 7-day narrow range. We're holding right here. Today was a hold digestive day where everyone's getting in. And it wouldn't surprise me again if this market opens after hours and just starts running higher. It would be very, very bullish. Now, if we fail after hours, say this market drops and takes out yesterday's low, there could be a phenomenal bear trap below yesterday's low, off the 8 period, which is 33, and then that would slingshot you higher if there's a rejection there. The failed new low. Think of this day right there. This right here, price got below this low, bear trap happened, and it slingshot price higher. That's what we're looking for here tomorrow. If price were to pull back from these, the closing highs here, watch 34. Anything below 34 could be a trap. 33 to 34 for a move, as high as 40 to 42. Again, we're looking for about 9.5 points of range right now. Just call it 9 points off of 33. That takes you to 42. And 42 is the 200-day moving average. After such a significant rejection on these lows, for the first time, we may see a move that takes us to that 200-day moving average. First time since this day when it went offered. Look at that. It went offered right there and never came back to it. So, crude oil, this one is perhaps the most actionable short-term idea that we have here for today. Again, looking for an upside continuation out of the 7-day narrow range toward 42 based off of our measurements here, based off of the compression and the breakout. And now any failed new low could be a phenomenal bounce opportunity. So you could literally get 33 to 42 and pick up that whole 9 points if we see that price tomorrow. So that's going to be the way forward for this one. Now, if we do see a failure and price breaks through 34 and then we have a big down day of some sort, then you're going to be looking to see if we see some sort of rejection inside the pivot range here for the month, because that could lead to maybe a bounce back off that zone. But right now, very, very strong for crude oil at the moment. And a great short-term opportunity over the next 5 to 7 days for this one. So keep that one at the top of your list there. Another one here we like to look at is gold. Now gold has been very, very quiet for the most part. It's been inside of a range for the last 2 months. And this is what I'm discussing here. When I mentioned the range developing at highs in the NQ above the prior highs, this is the pattern I'm talking about. You see the strong highs that came in right there, right? That's a key range high, key range low, and here's the midpoint. Those are the three most important levels on this chart right now. 1700 is really 1704.30, 1577, and 1450. Very important numbers. What's happening right now is price is compressing above those highs. And again, it looks like a distribution phase developing up here. Gold has rallied tremendously. It came within a stone's throw of 1800 for the first time in, what, 7 years or more? And now we are compressing at highs above a key range high. If there's a failure at 1700, anyone who got long up here, again, will be jumping ship and it will pull price down. That 1575 will become the target. If you're going to fail at a key range high, you return back to the key range mid. And if you get to the key range mid, odds increase that you can get across the range. Now this is a very giant range here of about, what is that, 150 points? No, 250 points rather. Where are we? Oh, that's 1450. So that's a huge range right there, 1450 to 1700. Again, 250 points of range, and that could easily, half of that could easily be seen here pretty soon if we fail to hold 1700. So this range up here right now, compressing, is building energy for the next major move. And how many days is this? At least a month, right? At least a month of compression. And then plus the prior month, so that's about nearly 8 weeks, about 7 weeks of sideways action within this range. At some point, something's got to give. I would say if 1700 can't hold, we may actually see a pullback here in gold for the first time in a while. This one's been very bullish overall, but just not really doing much at these highs. And again, that can look like it's bringing folks in, selling to people at a high price up here, and eventually the rug gets pulled and this thing drops. We will see. So 1700, very, very important for gold. All right, I want to jump over to stocks now. Let's talk some stocks over here. We got a lot of great stocks, short-term, long-term stuff, and then a lot of requests to get to. So I'm going to go ahead and start working on those right now. The first stock that I'll push up on the list here, this one is Shopify. Now, Shopify has been very strong, super strong. You can see the trend, very, very bullish. We had a huge 2-day correction here with a nice rejection tail and 3 days of sideways price action now. This is a double inside day. So this day is inside this one, and this one's inside that one. It's a double inside day. And those types of patterns can be extremely powerful once a breakout or expansion occurs out of that range. Now this one, I have it as a long signal, as a long candidate, but it is also a great short candidate if it fails through 725s. So that's the level we're looking at here, is the midpoint of the rejection day. We're holding that zone. Again, this market has been very strong, so I would be looking at any failed new low ideas. So if price were to take out 2 or 3 day lows here, there could be a trap opportunity, and then that could lead to an upside breakout. 4-day highs right here would lead to a huge breakout move. Even if it's just a 1-day or a 3-day move, right, it's going to likely take out those highs. If there's a failure to hold 725 on a closing basis, by the end of the day it closes below 725, then we're likely going to see the previous week's low tested. Or sorry, the previous month's low. That's around 600. There it is right there. If you're going to fail at the midpoint, then you're going to go back to the low, right? Again, this one is still bullish, very, very bullish. Very nice, strong trend Good PIMA trigger zone action here, and we're right inside that zone. So the expectation is for this thing to go higher. And again, options would be a great way to engage this one, either a call spread or perhaps selling a put spread if this thing goes higher. All right, let's take a look now at Ulta. Now, Ulta is one that I think has great potential here from a short-term perspective, but more importantly on a longer-term perspective as well. This one has great market structure. Those of you in the trading room already know kind of the story on this one at the moment. But this range right here is what we're looking at. You can see 228 up to 320. That's your key range of market action. You have a range above it that goes from 320 to 370. And then you have the price action, you know, everything that happened down below here, right? So this market has recovered tremendously off the lows from 125 and doubled to 250. It doubled, right? Now, it has also reclaimed the 228, 230 level, which is very important here. You can argue the level is down as low as 200. So you can see the rather 220. So you can see these lows here, and here's in the zone, and here. What we're looking for right now is for this zone to hold. If price were to pull back here, you know, another pullback of some sort, it could launch higher. And if it launches higher, it has a shot to fill that gap at 300. It has a shot to fill that gap. Here's the gap right there. And it could easily launch up to that zone. Now again, I don't know anything about their situation and their store situation and what's going on in terms of, you know, how they performed during COVID. I guess this tells you what you need to know, because the quarterly loss there, and they hadn't had a quarterly loss in who knows how long. But the market structure looks tremendous. The market structure looks tremendous. Again, if it can continue to stay above 220, 228, right here, right, it has nothing but upside to 300. So that could be a solid move ahead. The one thing it is doing right now is testing that 200 day. If it takes it bid, it could easily push to new highs very quickly. So this one is one to keep an eye on as well. We have, Ulta's going to be featured tonight on Mad Money, so that could drive up the price already right there. Thanks for that. Let's see, we have DocuSign, which has been tremendous. It has earnings coming up tomorrow. So this is going to be an earnings play. We'll see how it fares here. But this was on our list back in April and in March and April for a COVID buying opportunity, because again, this is a really good socially distanced type of company here. And it doubled in that time. 65 to 150. So that's an easy double to 130. And now it's actually exploded through that. But did we overdo it here short term? It's going to be something to see if this is overdone now, because look at this thing starting to get parabolic, right? We have this move like this, then it gets stronger, then it gets stronger, and now it's literally going straight up with earnings on deck tomorrow, right? And let's see, it's after the market. Oh, it's on the 4th rather. I thought it was the 2nd rather. It's the 4th. So on the 4th, it's going to be interesting. Are they running this thing up into earnings, and then are they going to gap it down, or is it going to fail to hold 140 and return all the way back towards, say, 120? Right? We have an impulse move that's happened at these highs. We're either going to see some sort of pullback here, or we may begin to see some compression as this market digests the recent move. It's just, this is overdone at the moment. But it was one of our candidates back in March and April, and it was also a buy candidate for us a few days back when it came up on our buy scan. This is the wick reversal candlestick pattern there, and I developed that code there to help us find it and scan for those opportunities. And this right now, again, 3-day range has been impressive. I did not get filled on that one, but tremendous move nonetheless, and a really great continuation. But now we're at these highs. It literally looks vertical at the moment. we'll see. If it can't hold 140, perhaps a quick pullback is coming. So I wanted to discuss that one a little bit. Another one that looks very similar right here to that one is CrowdSource, which is one, or CrowdStrike rather, CrowdStrike, which is one that we've also had as a buy candidate over the last few weeks. This is one that we got into as well and did quite well on the recent moves. This one also had this day right here, just like DocuSign, and look, it looks like DocuSign. They look very, very similar right now. So whoever is pushing those two stocks higher is probably doing it in a whole portfolio of these stocks, and it looks very similar. I mean, those look highly alike, and they're not, even in the same industry group, but very, very bullish. This is one we've had as a buy candidate as well, and now we're coming up to the IPO impulse range high. So you have your key range after the IPO started here, and we had 103.59 as the upside target. Nearly got there, then it dropped, and it hit the 100% target to the downside, 32.20, and since then has tripled. Tripled. That's just tremendous to see this thing go from 32 to 95, 96 to triple like that, but just incredible. But we're coming up to that point again where we might start looking toppy here, and maybe we don't do that, but we have to probably do something like this to come back here. All this is ill-traded, maybe comes back and fills in some of this. So this is coming up to a point where we got to be a little bit more careful, but this has been a tremendous stock as well. One right here that we played on earnings here, this is CGC. And this one is one that we took on earnings here and doubled it overnight. It was basically the 20 put. And this thing closed above the 200-day for the first time in who knows how long, and it was a perfect opportunity to just pull the rug out. The 20 out of the money put there was perfect because it opened up at 17 the next morning, and has continued lower now. So that was fantastic, because this one and this industry group in general is not one that makes money yet, and their loss was actually 10 times what it was expected. Instead of a 27-cent loss, it was $2.70, so an order of magnitude more. And again, just easily doubled overnight, and still in some of that trade as well, looking to see if it can get back toward 13. Now, one thing we noticed with this one as well is that it performs very poorly in on earnings. Earnings plays for this one are fantastic. If you just want to buy the at-the-money put or buy a slightly out-of-the-money put, it's going to work in many times. This is one of those times where it actually gapped up on earnings and then just crushed it. But many times it's a gap down on earnings, it's a gap down on earnings, it's a gap down on earnings, right? And then this time was a gap down on earnings. So the pattern held up here. Fantastic move. Now, what I like about this one, and the reason I'm discussing it now, is because I like the long-term potential of this one now off the 13 level. This one, CGC up in smoke, that's right. They literally burned through their profits or something, I don't know, or burned through their cash stash. It's at some point, I think this is still going to be the winner in that group. I was hesitant to get in anything long here. I was in before. I still have some in that position, but I've taken profits where I could up here. And now I've been holding off on adding because the low never looked like it was in. It just never looked like it was in. So there's no spot to add. But now we have ourselves kind of a 3-point reversal that's developing down here. Look at that right there. That's your kind of head and shoulder pattern, right? You have a strong pivot low, strong pivot low, strong pivot higher low. That looks like a fairly solid 3-point reversal developing. And the point to defend is this point right here. So that's 13.50, right? Somewhere in that zone. If price were to come back to that area, 13 likely gets you 26 on the next major rotation up, and that's the prior pivot here. It's where the change of bias occurred there. It was prior support over here. So 26 is the next target to the upside for this one on a long-term basis. And here's the thing that I always mention to our traders as well. For those of you that do like long-term ideas like this, because again, if you want to hold some in your longer-term portfolio, the thing that I do is I try to look to see where my upside target is. And then I look down and say, okay, where would a double be for that? You know, if that's the target, where can I get in that would be a double? And as soon as it does get to a double, you take out half of that trade. And now you're playing with house money for the end of time on that position. And now you have yourself a risk-free trade that you can keep for 5, 10, 20 years, hand it to your kids or grandchildren, and is good to go. You took your money out and left with house money, and that's the way to go. So with this one, if you want exposure to this group, which again, it's not the healthiest group yet, but down the road it may be. Again, you buy 13, you sell 26, take half off, and now you have a free trade forever until you want. And whenever that time comes where it finally breaks above 26, that's your 26 level right there, the next level up then becomes 40. Right? Market structure is very, very well defined in the stock. There's the market structure right there. You got this, you have this, you have this, right? And then you had the one little guy down here that got trapped. And so this is your market structure. If you can get through 26, it opens up 40. You can get through 40, it opens up 52. But what's likely to happen if this thing does bounce to 26, again, it probably pulls back and messes around until it can get through 40 or 26, right? So again, I like this one from a longer term perspective. It took a long time to get to that point. I thought we were there here. You see the same type of idea here developing. That was pre-COVID though, and it was starting to do its thing, just like we're seeing, you know, right now. But then COVID hit, you know, and just tore everything down. Well, not everything, I guess. But this is just another pullback here in what could be a great continuation down the road. You can also see the 200-day right here coming into play. Again, I sold it right away because it's just what you do for the stock. But at some point, I think it gets really, really bullish. So I like this one to 26 if it can hit 13. And that's where my order is going to be sitting and waiting. So we will see there. Again, the other thing here is you may be able to get a little bit better than that. Maybe you get 12.5. Because if we're going to take the previous month's close offered, and then we're going to take the pivot range offered, then where's the target? It's this one. That level. And that level is this low, previous month's low. If you're going to take the previous month's close offered, you go back to the previous low, and then you take that out, and then you shoot higher off that low. So we will see if this one can push higher off 13s down the road. I like it at 13, and I think it's a double candidate to 26. Now, how long does that take to get there? It could take a long time. It could also take no time at all. I mean, look at this recent move from 13. Boom, 13. It got to 22. I mean, it was just $4 off of that low, so it already did tremendous. This one has some juice right now. You can see the big waves and moves that are happening. To me, that seems to me that this thing's ready to get going here pretty soon. So I like this one at 13. And again, if we see 26, you got to take the money and run. All right, let's see. The next one here to take a look at will be work. This one is Slack. And again, this one benefited from the work environment, you know, social distance and all that. We had this one as our long candidate as well back in March as one of those ones that would benefit from this type of move or this type of environment. Same thing with some of these others, right? Like Zoom, which we'll be looking at, and some other stocks. I mean, they've done really, really well. This one's already doubled from the lows. And then we drew up this key range. See that key range right there? The impulse high to the impulse low back to the midpoint. Now we have ourselves a great key range. Bounced off the mid and then rallied up through the top. This is your retest and then you're exploding up to this level right there. 38.16 is the short-term target for this one. But the next target above takes you into 46. That's the actual real target right there. Well, not that they're all real targets, but that's your final destination target is 46. Can it get there? With this one, if it gets to 46, again, that's what we talked about before. 23 would double you to 46. And it hit 23, and now it's working its way and is at 37 now. Now, at some point down the road, perhaps we do get back to 23. I don't know. But I think a 30 half retest would be just fine as well for a short-term perspective. That's the breakout point of the key range high. We can pull back as deep as 30 on this one, and it could be a great move for a move to 45, 46. So not quite a double, but a good 50% move from 30 to 45 in that scenario. So as long as 30 holds, it has a great shot to continue toward 46. The moment 30 fails to hold, it returns back to value at 22.64. So that's the blueprint for work. Another one here is Costco. Now, Costco was one of the ones we also had as a long candidate for this COVID environment. It immediately responded the day we had it as a long candidate. Said, hey, that's a great tail right there. That's probably the low. And it shot up back to the high incredibly quickly. But what it did was left us a key range. I haven't drawn it here because I wanted to do it with you all right now. And so if you're following along, key range analysis is one of my favorites. It's something that anybody can do because it's just universal. You find the high, you find the low of that impulse move, and then you get measured extensions and measured key levels inside as well. And then the trades that you can identify off that key range, there's so many of them, and they're so useful. They're phenomenal. So what I do is I take the high here. Let me grab this. So the high is going to be here. And it's not just any pullback. Like, right, this is a high, and that's a low, right? You could do a key range right here if you wanted to, and it probably measures. But I don't do every single one. This is one if you wanted to do that, right? Or whichever way. I do the most significant ones, and then I use those as longer term key levels to use and trade off of. And so this is the most significant one here. We're going to take the high. The high is 325.26. Let's go right there, and then we got the low here comes in at 271.28. And the midpoint here is 298.17, which is about right here. So let's correct all these. Did I say 17? Oh, that's 26. And what was that low? 271.28. So this is how I do my Fibonacci extension tool. If you want to take a screenshot or if you want to pause the video here on the playback, you can customize this section right here. Fibonacci extensions usually have the fib levels 38.20, right? 38.20, 50, 61.8, and whatever else there are. I take a much simpler approach. I just go by 25s, by quarters. 25, 50, 75, 100, 150% expansion. These are negatives so that you get the both sides, and then these are positives. I also color code, and I change all of these as well. And so that's how you can get your Fibonacci extensions to give yourself customized targets. So you click OK, and now this is the range. That's your key range right there. In an uptrending market, you want to fade the low. So if price gets over here and rejects the low, you buy it and bring it back to the mid, and then you look to bring it back to the top. If price gets up here to the top and rejects, you sell it and you return it back to the mid, and you try to bring it back to the bottom. Those are the main trades. There's others you can do as well, but those are the main ones I focus on. And now, if we have a breakout, we have extensions now on both sides. If this thing breaks to the upside, we're going to 379. 352, 338, right? If we break to the downside, we have targets down here as low as 217, right? 100%. So this says 150 because it's measuring from the middle, but it's 100% from the edge. So this is based off of range. And when you have this range develop and then it just goes sideways like this inside the middle 50% of that range, I call that a neutral key range, which is one of the most explosive. And it tends to have a major breakout at some point down the road, and we will be at 379.14 some point in the future. And it may not be too far out. I mean, it could be there by the fall. So one thing about this type of pattern is that while it is building energy, and while I do believe we're going to do this, the hardest thing to do is win, because you don't have a breakout yet. You don't have a rejection day yet to tell you that it's done going one direction so it can start going the other. It's a waiting game. And you got to continue to watch Costco here, but at some point, if we do something like this, like a big rejection day down or something, and take out these lows of the last month or 6 weeks, and we put in a tail like that, that's going to be the day. That's going to be the day where it starts. And then you're going to see a huge breakout through these highs, and then you can just see this thing walk up. The other thing you're going to see is the moving averages. This 8 period, the golden one, is going to scream higher and provide support on the way up. So I like Costco. I think it's heading to 380 down the road. And if it goes to 380, where's a good entry? You know, again, if it can get it below the 200 day, that's about as good as it gets for this one, right? So again, there's no actionable entry idea just yet because we got to kind of let it do its thing here. But this is building energy for a major move to come, and it's Costco, so it's likely going to go up, right? If it fails, then it fails. But there's scenarios there where we can look down here and get a trap and get going this way. So it doesn't really matter what it does here. It's just being patient about waiting for that trigger and entry point. And we just got to wait. So right now, just want you to have it on your radar here because it's a huge, huge opportunity down the road waiting to go. All right, those were some long candidates. I have a few short candidates, and I'm going to jump into the requests. Oh, great question here by Grandpa Goat. What would make one range more significant than another? So to me, a key range is, let's go back to Costco. Oops, that's Costco. What makes it more significant to me is the reaction. It's the reaction. It's the market's reaction. This right here is a nice little move up, but look at the way this looks on the way down. That's a strong top. And then everything just starts screaming lower until you find a strong bottom. When you find a strong bottom, it's going to likely come back and snap back to that midpoint, which is one of my favorite trades, by the way. I love an impulse sell-off, and then if I find an impulse low like this, I love to play it back to the midpoint. I haven't seen many of those trades here lately, but it is one of my favorites. It's the developing key range midpoint retest play, where the key range is still developing to the mid, because once it hits the mid, now the key range is set in stone. But until that point, we're guessing that that's the low and we're about to bounce. But it's one of my faves. Worked out tremendously in this case, and we were actually going to play that. I was going to play that day, but I was going to wait for the next morning to see how it opened, and then enter on the open. And instead, it gapped tremendously higher and just sprinted. So I missed out on that one, but again, the play was right and was perfect. And that's what I'm talking about, is the reaction is what makes this key range so important. It's the reaction. It's just a significant move. And what it's doing, so this is why I say this. The reason these happen, why do these form, is because the market is setting the range. The market is saying this is the high, and now this is the low. And now we're going to just build energy between those extensions, and eventually it gives us clarity on targets. But that impulse move happens so that distribution can happen and fair facilitation of trade can happen. That's why those ranges form. And it sets the range. So it has to be an impressive move or some sort of impulse move, right? And that's the difference between really good ones and other ones. Sometimes you don't get any, right? I mean, look over here. Like, this is not anything impulsive about that at all. So you're really not really drawing anything up there. You could perhaps find that low and this high, but it's not one aggressive move, right? It was like and then one day up or whatever here. So it's not just like one fell swoop move. So those are some of the things I'm looking for there. Just a big swing move and then bang. And so that's what made the 2018, the January, February 2018 move in the ES. That's what made it so powerful right here. Was it found that top and it sold off over the course of 6 or 7 days until it found that strong bottom. And when we found that strong bottom, we said, you know what, it's going to go back to the midpoint, which was somewhere up here, 2720s. And it did. Again, the next day it got there, and then that became the key range to watch for a while. And it was super, super useful going back. But it's that impulse move. And over here, once you had that key range, like that, this is what I'm talking about when price tends to sit on top of a key range high and it can't go higher. It's bringing in late bulls. They're buying late, and then the rug gets taken out and this thing drops back to the midpoint of that range and back to the bottom of that range. And so we got short on this day right here because of that idea. We got short right there. And I took off all my longs heading into that zone, and I got short there. Right, we got short IYT as well, which fell off the map, but it was all based off of that one key range high and the behavior that had happened at that high. Look, it even got a buy signal there, brought some late bulls in with the buy signal, and crushed later. So those impulse moves can not only shed light on awesome entry opportunities and targets in the near term, they can go out and be useful a year later. I mean, I just took that key range off recently and put on the Q4 range instead, which is now one that has held very, very nicely over the last year plus. So I'm using this one from 2018, and it's given us all the great levels. Here's the key range low. That's the trap. That's the trap, and that's the go. And so when price was dropping early on, everyone asked, where do you think the low is going to be? Well, this would be the great spot right there for a trap. And it became the perfect spot. So tremendous when you get a good key range. I mean, it just opens everything up. In my book, I call pivots the roadmap. You know, I say it's like a map. You know, you're driving on a road without a map. If you don't open them up, it's the same thing. It gives you a blueprint or a roadmap to use moving forward, and that's why I like those key ranges a lot. So thanks for the question there. I know I can go very deep into an answer sometimes, but those are really, really good. All right, here's Adobe. And speaking of key ranges, here's Adobe. There's a key range high, and look at where we are right now. This stock is very strong. It has bounced off of the lows of March and has already rallied back to the highs of the year and is now sitting up here. So this is one that while this market remains very strong, clearly it's, you know, straight up, buy the dip and, you know, rally. It's very nice. But how many dip rotations have we had so far? We had a strong low, you know, buy the dip once, buy the dip twice, 3 times, 4 times, 5 times. At some point the well goes dry. And it usually happens at about the time you get to the prior pivot high. And now we're up here, and what's going to happen? Are we going to reject? Are we going to fail? If so, there's a quick rotation that can happen back toward about 340 in this one. 340 would be a market structure kind of target there. But it could theoretically drop back to the midpoint of that key range, right? So that's 320. That's also around the 200-day. So Adobe is one to watch here as one that may be overextended in the near term. I'm not saying to sell it right now. You got to find evidence of rejection at these highs, and perhaps it needs to do a little bit more up here. But that's the previous month's high. This is the high for the year up to this point, and we're testing those zones right now. And if there's a rejection up here, we're going to come back to the midpoint of last month's range very quickly. That's right here around 365. And then we have a shot to drop as deep as the midpoint of the key range. So we're coming up into that point where we may see a bear trap here in Adobe, but it's been super, super bullish here so far. Another one here to watch on the sell side would be Burl. This one is showing rejection up here. And one of the things here, again, it's rallied tremendously off the lows, 110 to 220. And so what happened was whoever got in at 110 bought 110s and immediately put their target at 220, because that's a double. And when it gets to that target, you sell half. And whoever bought that point, they're in free and clear now. And this point is also the 120 level, or 220 level, is also right around prior support here, right? So this market sat up here, and then it failed, and it opened up all of that downside. And then it's come all the way back to the breakdown point now. And now we're showing the sell signal. And then we have 2 digestive days right here. So for those of you who have my Swing Trade Pro 2.0, this would be the rejection trade sequence. Rejection trade sequence here with a couple of absorption days here. Best entry would be there. If price were to take out the high 215, there could be a bear trap here and an outside day potential to the downside. A breakthrough 5-day lows opens up a stop run day, and you could easily return back toward 190, which is the 200-day. That's been a very sticky level for this one. So after rejection here to key range level, you know, again, we could see a little bit of weakness here over the next 1 to 2 weeks. So this one, keep an eye. Again, best entry would be a failure above 215. And then a downside break through 205s opens up a stop run day toward 190 at the very least, and then perhaps, you know, maybe a little bit more into 180, something like that. So again, this one's a good short-term sell candidate here. Now here's the out. The out is if price pushes through 215 here and closes above it. If it closes above it, the retest the next day would be a tremendous buy for a further squeeze. So this one is due for some movement here pretty soon. Right now it's looking like it's lower, but again, 215 is going to be the key. Another one here is MA. You can see MA has the same exact pattern. This right here is your rejection, and these are 2 rest days after people into the trade at that point, and then some point we're either going to run the stops through the highs or we're going to run the stops through those lows. Right now this one has been very strong. Again, 200 up to 310 off the lows, and then you have the break that occurred right around 280, 290, right, 285. We've broken through that zone, so if we do pull back, it could be a great buy as this thing continues higher. So sell signal right here, digestive days. Again, 305 could be a trap for a push back, and if we drop into say 285, 285 could be a great continuation toward 320 to 330. So that's going to be what to look for here, as this one shows signs of absorption as well. Okay, now I'm going to jump onto some of the requests that you guys and gals put out. First one here, CRM. This is Salesforce. This one has been quite strong as well off the lows. Again, a lot of these stocks look very, very similar. A lot of these stocks look very similar, right? Just an exaggerated sell-off, a very sharp V-bottom reversal, and some of these are coming toward those previous highs. Some are already through them. This one is done really, really well off those lows. Now, moving forward for this one, oh, the market just reopened right now. I'm going to watch gold here, see what, rather crude oil. See how that goes. All right, so with this one, the key range here, or not the key range, the market structure zone that I'm looking at, you have, the top of this range, which is about right there. That's the zone to watch in this one. That's why it bounced off the 165 here, right? When it shot through it, the retest was going to be important to keep you above it. So 165, very, very important there. If it fails to hold 165, you could rotate back to 150 or perhaps as low as 140, which is the bottom of this market structure. So you have this move right here, all that stuff, all this stuff in here. You break through here and rally, then you fail there, so you go all the way back to the bottom. Nice bounce off the 113s, higher low, and go back up. So this is the market structure that you want to watch, is the 165s. If it fails to hold there on a daily closing basis, you may have all the way back to 140. But as long as it holds 165, it's in this upper market structure right now, and it could continue back toward those recent highs, fill a gap up there, those types of things. So as long as it holds above 165, more upside for CRM as I see it. The next one here, Facebook. Facebook a little slow to come up. There it goes. That's odd. Facebook, very, very strong. Again, another one that has done well, recovering from the lows. Is this a new high here for the year? Yep, sitting on a new high for the year. Now this one, 220, is a good level. Again, we're kind of at highs. This thing has been just running very nicely higher. And now you form kind of a box up here, right? The trend is just very, very strong and bullish. Hard to sell this one, right, when it's so strong. But I would say if this can't hold 220, 219, right, then there could be a little bit of a pullback coming. And then that pullback might be bought very, very quickly. This stock has just been very strong. So I would say that this strong, pullbacks still remain buying opportunities for this one until proven otherwise. And the key level for me to watch would be 220 for signs of short-term weakness. A failure to hold that on a daily closing basis could open up a move back toward 200. Okay, let's take a look now at Tesla. Tesla broke through highs. Major breakout today, up 7.5%. Looks like Thinkorswim is doing some thinking here. Right there you see a nice range, and we got the massive explosive move this morning on a nice gap and run. That was strong, right? This one is one of those ones that has a ton of volatility, obviously, and remains very bullish. It's just super bullish, right? It just is. You got folks who really love this stock no matter what, and they just want to be in. And the market structure here almost doesn't even look real. I mean, 400 used to be it, right? That was the range we were in, 240 to 400. When we broke below 240, it built a range. And it was this day right here, which if I zoom in, it's a pretty significant little day. That's the day where I said, you know what, this has a really good shot to rally back to the top of the range. Because again, it was below the market structure, and when it starts to come back into the market structure, it will go to the top of that range. And when it happened, I felt very smart. And then you look up 2 months later, and it doubles from that target, so or more. I mean, this has just been bullish. So the last time it came to that zone, 360 to 400 here, was COVID, and it bounced off that zone again. So this is just one that continues to be very, very bullish. I believe Elon used to kind of shoot himself in the foot a lot with his own stock, but he's done less of that lately, and this has been very, very strong. So I like this one still as a stock that just continues to do well. But it does have quite a bit of volatility that can happen here, so you have to know that. Above 1,000 will be interesting here because we've seen just very clear, quick selling pressure up here above 950. So to get to, if this takes out those highs and trades where it's not traded before, I'm wondering if we might see more profit taking there. So this one's been very, very strong. I think it continues to be bullish. Pullbacks to be bought until proven otherwise. The next one here on the list, the technology around me right now is falling apart, it seems like. Amazon. All right, let's look at Amazon right now. Very slow thinkorswim right now. It happened right when the market went live again. So there's Amazon. Very strong as well. Impulse range right here. That's the one I'm using. You got your key range high, key range low, midpoint, and it's exploded and went up to the 50% extension. Because of that, we now are focusing on the 100 to the upside. So to rally the way this one did and then go sideways, it has more upside to 27.45. Key range target here, 27.45s. This one could theoretically pull back as deep as 2200 and still be a great buy for 27.50. That's the key range high, right? We're up here building a range, but there's bullish ascent to it. But it could theoretically drop as low as that 2200 and still be a great buy for a continuation up. As a matter of fact, it'd be a great trap down in that zone because of the previous month's lows right there. If price were to take out that low and get into that zone, it could be a great trap for what could be a move up to 27.50. So I like this one. This one ain't going anywhere anytime soon unless they break up Amazon like the baby bells or something. I mean, it's just the guy's going to be a trillionaire pretty soon and rule the universe. So this is just very, very strong right now, and it continues to be a great buying opportunity on every dip. Zoom, ZM is another one. Zoom is very strong as well, up 13+% today alone. This one's trading right now at 204 and has earnings coming up. So, you know how we have FANG stocks, right? FANG. It's Facebook, Amazon, Netflix, Google. And before that, there were others as well. The Fab Four, I used to call it, and you know, it was always somebody different. It used to be Microsoft, Oracle, you know, those types of companies. Then it always changes. Right now, we're seeing kind of a COVID pattern here on some of these, and it's ZM. It's that CrowdStrike we looked at a little earlier. It's DocuSign, and this one looks like all of those, right? This one also was a buy candidate for us in the room. Dwayne was the first one to bring it to our room here from our trading room, and that was back when it was sitting on 100. And to see it go through 200 today, just incredible strength. Just incredible strength. But is it now vertical? Has it gone parabolic? I like this one to continue higher longer term and just continue pushing higher. It's tremendous what this one has done ever since breaking to the upside right here in February. That breakout at 80, you know, it's now at 204. I mean, that's just tremendous. So this is a very bullish stock. When you look at this stock and look at the last 3 days, it is clearly being bid up tremendously in a way that makes me uncomfortable. Like it could snap back very hard any moment. And that's what CrowdStrike looks like. That's what DocuSign looks like right now. But I like all of those long term. It's just the pattern right now looks overextended. And it wouldn't surprise me on earnings if we gap down some and then come back to the midpoint of whatever this impulse move becomes. And now we have ourselves a new key range that we can use up here. So this is starting to look overdone here, but I still like it. and I still think it has much more upside longer term. But in the short term, it may look parabolic, and it looks like it's putting in a strong top up here. Well, it doesn't look like a strong top. It looks like the potential for a strong top, like that. Whenever they drive it so high and drive it through all-time highs and just keep driving it higher, there's the potential to be left holding the bag the next morning. Okay? Look at this last time over here. It gapped down the next morning and then took out the low of that huge up day, right? Tremendous. So this is the kind of situation we're looking at again over here. If we gap down anything below 200 tomorrow morning, 195 even, man, things could get very hairy very fast, and we could be retesting the 180 zone very quickly. So something to consider with Zoom. I like it long term. Looks a little toppy at the moment. Another one that we'll be looking at here is JPM. JPM. Now this one's up a little here today, 98.60. Again, banking stock. We have GS coming up next as well. Bank stocks have not really fared very well, obviously, and it's still up. We don't know what it's going to look like even 3 months from now or 6 months from now, right? 40 million unemployed right now. Again, these banks are holding notes from people's houses and cars and things of that nature. I mean, it's going to be interesting to see how that shakes out. So it's hard to like banks in this environment. But having said that, these prices are some of them have held some very important support levels, like this $80 level here. Very clear LVN, CLVN. But it's just not done. These are range bound. They all kind of look the same right now. They're all back and forth range bound. And I think that's what we have right now out of these, is that they're going to continue to go back and forth in these ranges until there's more clarity down the road. The way that these get going higher fast, in my opinion, at least one of the ways would be for some sort of surprise vaccine announcement or something, or whatever, that would be like, whoa, maybe these things are now ready to rock and roll. But this one right now, and along with all the others, very, very quiet ranges for the most, well, not quiet, but just very clear price action between 80 and 100, and we're likely to stay in that range until proven otherwise. So that's the outlook there for JP Morgan. GS, Goldman Sachs right now, trading just under 200. This one has bounced back better from those lows, 140 to 210. This one has now reached that 210 level, which is an important level, key level, going back several years. So you can see right back here, we have these key ranges or key levels here. You break down here and you drop back toward your prior support. You drop here, you drop back towards prior support. We bounced off that 130, 140 level. That was a good level. And now we're back to 210. And so, if anything, you have good levels here to watch. If it can get through 210, it opens up 255, right? It's back inside the range. At some point, I would think GS gets back up into that range. So I think at some point above 210, 215, it's very nice. It has some good upside. But after doing this entire move to get all the way back to 210 today or yesterday or whenever it was, I guess that's Friday, we may see some range-bound action, maybe 180 to 210 now, as this thing kind of absorbs that recent move. It's back inside this market structure. So it needs to get above 215 here to open up toward 250. And until that happens, we're probably stuck between 210 and 180. Over here, CLDR, got about 3 or 4 last ones here, and then that'll be it. We have CLDR. Now this one's a good one. I really like Cloudera here. Off the $5 level is a fantastic bounce. Just a great bounce. It's now doubled off that $5 level, up to $11 right now, closing price. But I think it has to $12 coming up. So that's the market Major support down here, major resistance up here. We have some mini zones in here where it's kind of compressed in order to build energy to make that next move. So I think this one's still headed higher. We had a buy signal on this one here recently, and it's done really, really well. It was on our buy list a few days back. And nice move up to 12 is still coming. But then at that point, that's where things get serious, right? Are we going to see some selling pressure? Because not everybody got a $5 fill. Others got $6 fills. They're going to double at 12. And so up there, we might start to see signs of a little bit of profit taking, and that may pull price back toward $9. So, you know, kind of going through here. So at the moment, short term, I like this one to go to 12. And then at that point, it may rotate back to 9 and trade in here for a bit. Above 12, starts to open it up to the upside. If we look at kind of a longer term view on this one, if it can get through 12, it has 20 where you can get above. So this one I do like here. Short term, it's been very, very good off those lows, and I still think it has a little bit more upside before a decision point comes. The other one is car. Awesome, will do. Thanks for those. Car is one of these here, Avis budget. This one is breaking back above that important 2140 level. That's a key level, so you can see right here. And you can see a lot of these, we're seeing the same types of price action. We're seeing major support levels taken out, and then you're seeing some development down here where it kind of digests that move. Look at this thing drop from 53 to 6. 53 to $6. And then it's chopped back and forth around the $14 level where it got a little bit of an HVN there, and is now back above 2140. So you know exactly what I'm going to say now, is that now that we're back above that 2140, it opens up the market structure above as high as the top of this range, which is 37 now. So for this one to get back above 2140 is very important. The way that it did it is exactly how you want it to do. You want it to shoot through that zone and create some spacing between that level and where price is. And at some point we may pull back into 2140, and that will be your entry. If you can get 21, you may be able to double at 42 sometime down the road. But short term, 21 to 37 high odds trade with 32.61 as VPOC. So again, I like this one. We could even see a pullback as deep as 19 perhaps. Right? If this thing were to pull back, say into $20 or something like that, you might be able to go 20 to 40 and double a bit better there. So I like 20 to 40. If it got even a little bit lower than that, remember to double to 36. If it gets to 36, then you would need an 18 print. Not sure we get an 18, but if we do, 18 to 36 it is. So that's a good one here. Again, it's back above that key low, which means it's going to start driving toward the recent highs. So I like that one. Very, very good one there. EXK. Oh, didn't take. EXK. Here's another one. So looks like this is a silver company here. This one looks exactly like the one we just saw in terms of the pattern. Here it is. Right? You have this trading range that trades in here. It breaks down through the bottom and builds this market structure. And then you get the explosive move up back into the range. And now theoretically it could pull back as deep as that 170 and be a push back toward the top of the range at 280. So this one is on the way up. 170 is a great level. Again, you never know if you're going to get that retest at 170, but 170 is a great level, and a 340 would be a double, and that would be toward the recent highs. Again, that might take a while to do something like that, but short term, 170 back up toward 280 is a good short-term move for this one, with the potential to get 340. So there could be a double from 170 to 340 coming out of that one. Last one over here, TRVN, and then I'll jump into the ones you just mentioned right now in the chat. TRVN, Trivana. This one rallying off the lows here. Cheap stock also going from 50 cents up to $1.50. This one has been very strong off these lows. It has broken a major trend to the upside. The day it did it was just boom, right? 80 cents, and it went to 150, which is VPOC. And so to take that bid right there, I think it's on a a markup phase now. You could pull back, maybe as deep as $1 or $1.10 or something like that, and still be a good continuation pattern toward $2. So $2 would probably be that next zone here where this one is headed. Again, a great move right here off the 80 level for that break, and now you're kind of higher. We have a higher value relationship for the month. So again, if we pull back as deep as the previous month's midpoint, for example, which would be about $1.11, $1.10, there could be a potential to push this thing toward 2 to 220 down the road. Not bad here out of this one either. Let's see. BA. So here's Boeing. We put a key range on Boeing down here after the recent sell-off, and that's the key range that's going to set this one off. You have that high right there, you have the low that comes in here, and the midpoint is right there. Strong low at 90. 89 was the low there, right on the money. It's now trading at 140. I believe last time we talked about this, I said a 120 entry will double this one to 240. 120 entry. And so it's hit 120. About 2 weeks ago, it hit 120. And if you get 120, I think there's a good shot to get to 240. You have your falling 200 day. It looks like a great meet me at the 200 type of move coming. So again, that's the idea with this one that we had set up before. If it can hold this 120 on a retest, you could double it to 240 down the road. Now, how long does that take? Who knows? Because this one obviously has unprecedented pressure that we've never seen before. I mean, it's just incredible. But at the same time, just to get back to 240, while that would be a double, it's still way off the highs where it was. It's still way off the breakdown point. So it's not a pie in the sky target, in my opinion. It's a really good manageable target to double your trade from 120. So 120 held on the first test and the second test. Do we get another one? I don't know if we get another one, but we could. And if so, again, as long as 120 continues to hold, I like 240 as a target. If we come in here and fail at 120, oof, it can get ugly below 120. So that's Boeing. Another one is Intel here. INTC. This one was down about $1 today, which is about 1.7%. Decent bounce off the lows from 44 to 64, almost near the highs of the year. Not the best price action. Very choppy price action out of this one. Lots of back and forth. The support level was really good off 44s. That's a really good key level there. This is an old key range over here. I should probably take off. Let's take off this old one. Boom. Done. With this one, it's not the prettiest stock chart right now. It definitely has some key levels here to watch, like the $60 level I think is important. But other than that, it's not a whole lot to work off of this one. It's clearly trending up right now. 56s is held, so higher market structure. Now it's above 60 here, so it could pull back as deep as 60, and I think it's a buying opportunity to 66. So you could probably get 10% out of that one just on that move. You're just basically going based off of the trend. It's trending up, and until proven otherwise, I think a pullback could be a buying opportunity off 60 in the short term to get to 66 or perhaps a little higher. Let's take a look over here at UPWK. Oh, thank you for the request as well, Xander. UPWK here has popped above the 200. Upwork, I'm not sure I've seen this stock here, so this is a new one. No analysis. It looks like an IPO. The IPO over here. Oh, this one right here. These pivots. Vinod is asking, please explain what pivots you have marked on the right. Yeah, those are actually, so the current month's pivots are here, right? And what Thinkorswim does is it starts showing you the forecasted pivots for the next month based off of the current month's range. So that's what that is. It's really not, I'm not using them. So it's basically using today's high-low close information to create the PivotBoss pivots for next month. But they're not, these are just developing. The real ones are these. Yep. Okay, so UPWK looks really solid. I like this one. If it can stay, you know, above that 11 zone, it's finally changed the bias of this trend. The trend was clearly down. Here we got the breakout to the upside, and this LVN at 11 is going to be very important. It's also where the 200-day is. So if it can hold the LVN here, and it currently is, it has a good shot to have another move up. There's a gap fill that we can strive for at about 15 bucks. And we also have a nice little rejection that has developed over the last few days here. It did close below that midpoint, which is not my favorite, but it didn't go lower. Instead, 3-day sideways range. This is absorption after rejection. It has a shot for a stop run day pretty soon, maybe tomorrow. If it breaks through these highs at 1250, we may see a 1-point rally out of this one to 1350 in one day. But if it does do that, give it 1 to 2 weeks, and it may have a move up to 15 to fill that gap. So it's looking pretty good right now from a short-term perspective. I like the recovery of the LVN and the 200-day from a longer-term perspective, which I think could give this one some juice back towards 17. Right. So one last thing I'll note on this one is there's your distribution here, and there's your distribution there. So to get back above the B, right, from the lower part of the B-shaped profile to the upper part of the B-shaped profile, then you'd be working your way to the other side of the LVN. So if it can hold 11, you have up to as high as 17 to get to the top of that zone. So that's a good one there. The other one here is BP. BP up about 3% here today. Trading 23.84. And it has clearly consolidated here. Very, very narrow range after rejection off 16s. Oil is kind of in the same boat as the banks a little bit here, right? You got this big drop. And while tech and others have rallied back to these points already, and some have done that, you have oil and banks and some others that are just sitting here, digesting off these lows. This is an energy building phase, holding 21s. And if it can hold 21s, I think that's a good shot to try and get back toward 35, which is value, 35.89. Even the breakdown point would be, you know, I guess it's 35. Yeah. 35 would be the breakdown point and value. So if it can hold 20, 21, it has a shot. I think if it fails to hold 20, you're going to take out that low. At least try to double dip it. So I think 20 is kind of the key level on that one, with some upside toward 35. The 200-day would be 31 and change. But again, it's hard to say when these might move. I mean, they could go sideways another month or 2 or 3 before that move happens. But at least we have some key levels to watch. That 21, 20 zone is very important. And as long as it stays above that, I think it has a good shot to work back toward the gap fill at 31 and back toward value at 35. All right, well, I think that does it for the request line there. Thanks so much for populating the chat with all those great requests. A lot of really good stocks there. We have some really good ones that we'll watch for the upcoming month and as we head into the rest of the summer. But again, I want to say thank you all very, very much for joining me this afternoon. I know there's a lot happening in the world right now, and I'm always very, very grateful to spend time with all you fantastic people. So thank you so much for joining me here this afternoon. We'll be back in the trading room tomorrow morning. For those of you that want to jump into the trading room, it is 50% off for your first month here. So for the first month, it would be just $49. And again, we got a collection of great traders in the room. A lot of fantastic traders with great experience, and it's been a lot of fun trading this market with these traders every single day. Today was a little quiet in the room because it was a quiet market, but I think that's going to set up a fantastic trading opportunity tomorrow. So would love to see you in the trading room if you're not part of family already. For those of you who are in the trading room, it's going to be a lot of fun to see you again tomorrow morning so we can knock it out of the park again. Thanks a lot for joining me. Always my pleasure. Y'all have a fantastic night, and I will see you soon. Take care.